But today, we have customers who put 500 crores with us.
What was your biggest challenge?
Did not have enough money in the bank to even meet the payroll.
What are the lessons that you've learned from the mistakes that you saw being made?
Didn't want to dilute their stake and therefore, ran out of cash.
Think you know what success looks like? Think again. Meet the disruptors, those who dare, dream and defy.
Do you really know the company you invest in? What's the picture behind presentations and claims?
Hi, thanks so much for joining in. You're watching Ask Profit on NDTV Profit. My name is Alex Matthew and with me is Anushi Vakharia, and we'll take you through the next 1 hour of trade. Hi Anushi.
Hey, morning Alex.
Morning. All right, let's take a look at where the markets are right now, and if you thought that yesterday's session would give you a respite, well, that was the case, but today once again you're seeing selling, and you're seeing selling across the board. So cuts of close to 0.5% for the benchmark Nifty 50 and bigger cuts for the broader market. So you have the mid-cap index that's currently trading with cuts of about 1.3% and the small-cap index also about 1.3% lower. So quite a bit of pressure on the downside for the Indian equity markets. Of course, this is the case for most global equity markets, and I think the big talking point globally has been the increase in the bond yields in the US and the strength of the dollar. So the risk-free return, of course, in the US going up has had a bearing on risk assets globally, and that is being visible in our markets as well. We'll have to look at the sell figure for the foreign institutional investors in trade today. Of course, in trade yesterday, you saw selling of only about 1,500 crore, which was matched by the foreign domestic institutions. We'll have to see whether that pans out in trade today. But the stocks that are under pressure today, the likes of HDFC Bank, heavyweights, Reliance Industries recovering a little bit of ground on the other side, so proving to be a counterbalance of sorts for the loss that you're seeing in HDFC Bank. Infosys losing ground, and of course IT is going to be in focus this week on account of the earnings, which kickstarts tomorrow with Tata Consultancy Services, and ICICI Bank from the banking pack also losing ground. But let's also very quickly pull up the sectors, because that will give you a sense of what is happening. And IT under pressure is losing about 1.3% or so, and is one of the worst performers, if not the worst performer. Realty as a pack also not doing too well, and Anushi is going to tell you about why in just a bit. But you have the metal pack, which is down about 0.9%, the Nifty Bank, which is down about 0.75% or so, and even pharma and auto are losing about 0.4% each as we speak right now. But Anushi, a lot of business updates coming through. Tata Steel was one that talked about the production numbers, but I think a lot of people focusing on the housing and the residential space. There were a few big winners, but a few disappointments as well.
Right, Alex. So if we see in the start of the week, we saw this update coming from macro tech developers, which started on a very good note in terms of how the numbers were. They reported about a 30% plus growth. But it's Sobha, which is kind of a downer today for the Nifty Realty pack. We are seeing a pre-sales downtick of about 28%. This is the YOY figure that we are looking at. The pre-sales numbers stood at 1,249 crore as compared to 1,735 crore. Realizations though continue to remain on the positive side, 16.5% growth in this quarter. The another one which is in focus is Signature Global. Now we see about a 120% of a pre-sales growth for the third quarter, which takes their guidance number. They have a target of 10,000 crore of guidance, so they've already achieved 87% of it. So that continues on a strong footing. What is surprising for the street today is Ashiana Housing. Now very strong set of numbers. We've looked at area booked stood 6.75 lakh square feet, which is 101% growth. Value of area sold, that's your pre-sales number, 454 crore of figure, which is 161.2% growth. So interesting business updates coming for the realty pack in general. But a couple of other stocks also in focus. We have the likes of Kalyan Jewellers, which continues to see a downtick in trade today. This is despite the City note that we've seen where they've maintained their buy. record after the business update that it had just before. KC International, another stock in focus, they received orders up to 1,136 crore across their business verticals. But despite this kind of new orders, which they not just received today, but even earlier this week, we're seeing about, there we go, about 5% of a downtick in trade today. So these are the main stocks to watch for the session in trade today.
I wonder how many people have questions on this, by the way. If we haven't pointed this out today so far, but the two numbers that you see on the screen, up there is the WhatsApp number, and down there is in fact the number that you can use to call us. And incidentally, we've got our first caller for the day. But before I go to Shweta, who's calling us from Hyderabad, let me introduce who's going to respond to your questions today. And we've got Samir Dalal of Natwar Lal and Sons Stockbrokers, and we've got Vaishali Parekh also joining us this morning. Good morning to the two of you, and thanks so much as always for taking the time. Let me go across to Shweta straight away. She's calling us from Hyderabad, and she's got a question, I believe, on Dixon Tech. Shweta, thanks so much for calling us. How can we help you today?
Hi Alex, thank you so much for taking my call.
Our pleasure.
And I'm holding Dixon Technologies of 15 shares at 15,839 price. Today I've seen a sharp decline. I think I want to know whether will it continue the profit booking, or should I book my profits and exit?
Yeah, that's a fair
And I
point.
also want to know, but I want to stay in EMS sector. So is it a good time to enter from Dixon to Keynes or Amber?
Okay, so it's a dual question, and generally I do not do this, but considering that you have quite a considerable amount invested in this stock, I'm going to do that. A quick view, Vaishali, on whether today's drop is something to be concerned about from a technical standpoint, and would you use it as an opportunity to exit if you've invested at levels of 15,839?
Very good morning, all of you. So yes, market is actually getting into a new round of selling pressure. And today's candle, it shows a little bit of weakness in Dixon. So I would definitely suggest to book partial profit. And if she still wants to hold, then I think 16,700 acts as a very crucial support, 16,700. So if those levels break further on, that could trigger further selling. So either book partial profit or wait for the stop loss to hit.
Samir, the second part of that question, of course, and I think this will benefit a lot of people because Dixon is a popular stock that a lot of people are interested in, but the EMS space as well, right? So the second part of the question was, should you exit something like a Dixon and find opportunities elsewhere in the EMS space? Samir?
Yeah, hi. That's for me. Okay.
Yes,
sorry.
yes.
So Dixon is actually a good company to have, but the problem is simply the valuation. Now, look, this is a company that has pretty much got orders from every cell phone company to manufacture in India. They have a lot of, like you said, on the EMS side, a lot of orders coming in. The problem is across the board, be it Amber, be it EPAC Durable, all of them are trading at premium valuations. So the question remains is, should you stay with the largest player or maybe try to go to somebody who's smaller and who could probably grow at a faster pace? I think given the fact that India is in a growth space and given that Dixon, which is the market leader with the largest capacity and the largest setup, I think they would probably stand to benefit the most. So from that perspective, I think I would stay put in Dixon. But if you're asking me, I mean, from the entire list of them, but if you're asking me, I find valuations ridiculously expensive. I agree earnings will catch up because a lot of the order flows that have come have still got to get executed, which means the operating leverage will play to some extent. But you got to remember, these companies work on very small margins. If you see the net profit margins, they range between 1 to 2%. So if for some reason something were to go wrong where they get stuck with something, I think it could take away the profitability. So I'm as bullish as I am on the long term of this space. I think valuation discomfort remains. So for me, I would not be an investor in these at this point of time. But if you had to choose any of them, I would choose Dixon.
Okay, so that was the view for Dixon Tech and a comprehensive view on the overall EMS sector and how it functions. But moving on to the queries now, the first query is from Sarath from Dubai. He holds about 70 shares of Electra Green Tech, and this is at a price of 1,694. Currently sitting at a loss of 18.18 lakh. In fact, if you pull the 6 months of 18,000. So in fact, if we pull out the chart also, we've seen a considerable amount of downtick in the stock price in the last 6 months or so, currently trading at 1,433. Vaishali, coming to you on this one, whether Saraj should continue to hold Olectra Greentech or should he take a exit position in this one?
So according to me, actually the long-term chart is quite intact. We have seen a good corrective move coming from 2200 and now coming closer to a prominent support of 1400. So now that he has held on for so long, continue holding with a stop loss of 1400, because if the stock moves below 1400, it triggers weakness. But I guess at these levels, it will show a good bounce from here on once we see stability in the market and if 1400 levels are held on. So not in a hurry, should he exit at these levels.
Okay, Olectra Greentech, it's a hold on the technicals as things stand despite the recent underperformance. Ramesh is calling us from Hyderabad. Ramesh, hi, thanks so much for calling us, and how can we help you today?
Good morning, panel members. And I have bought like ESAF Small Finance actually.
Okay.
In February 2024 actually, at the price of 68.
Okay.
And the price keep on dropping actually.
Okay.
When is the reason it has been dropped, and can I hold long term or can I average that stock?
Okay. What was the thinking when you bought it? It's a 2,000 crore market capitalization company. What drew you to this? You've bought 5,000 shares, so it's a significant quantity as well.
Like I just compared myself with the big large cap companies actually, Bajaj Finance and other sectors. They were doing well in that industry. I hope this company will be doing the best as per the market. That is the only thing, attention to buy that stocks actually.
That was the intention. All right. Do you have any other stocks in the financial space that you've bought, Ramesh?
Currently, no, actually. That is only one I do.
And do you have another few stocks in your portfolio?
Yeah, I do have other stocks actually.
Okay, got it. Samir, I'll come to you on this one. ESAF Small Finance Bank, a significant quantity bought at levels of 68, lost quite a considerable amount of value. Stock is currently trading at 40 rupees. View on the fundamentals, would you hold?
So let's address the first question that he asked is, why is the stock falling? The stock is falling because of the micro loans that they have. The entire microfinance segment is going through a tough period because of the delinquencies increasing post the RBI guidance of the problems that exist in the sector. You have massive over leveraging where borrowers have borrowed from 4 and 5 different lenders. So now I haven't studied in great detail of if ESAF has their borrowers have multiple loans or not. It's difficult for me to give at this point of time. But what I can say is that this space is going to remain under some amount of pressure. Secondly, if I were to be an investor, I would rather pick a larger player in the similar microfinance space. From in the banking also, which is also a bank which has more comfort on valuations rather than being an ESOP. They're not expensive. It's trading at about 0.9 times book value, so it's not expensive. But I think if you compare across the board, given the size that they have and given the deposit base that they have, I think there are better opportunities. So for me, I would not hold on to ESOP but move out. If you want to take a call, I think Bandhan Bank is seen extremely low levels. It's a very similar kind of business model, microfinance being a big chunk, and that is why that has also fallen. So that is maybe something you can make a switch. I believe that could move up to 200 in the next maybe 6-8 months once the microfinance space turns. But if you really want to have a very, very good call with low risk, I think IndusInd Bank is the play to be making. For the simple reason that, look, they also have a large microfinance book. They also have seen a slowdown, and the stock has corrected from all the way from 1,500 down to below 1,000. So you're seeing a good 33% correction. They are well diversified. Their microfinance doesn't become the largest portion of their loan, but it's some part of it. But they are able to grow their other book and ensure that growth is there. So over time, I feel IndusInd would probably be a better bet. So that would be my advice. Take the loss in this one and move to a bigger, better counter.
I just want to point out that Devi Prasad from Bengaluru had a question specifically on Bandhan Bank. He's bought at levels of, let's pull up the chart. He's bought at levels of 173.7 on average. The stock is at 152, so it has lost a little ground. But based on what Samir has said, it's one of the 2 banks that he likes that operate in the microfinance space. So bear that in mind, Devi Prasad.
Right, but let's keep a focus in the banking space. We have another query. A lot of interest from this side of all is holding. Next viewer is PJK Raju, and he's holding 10,000 shares of Bank of India, and this is at a price of 100.10. He wants to understand the long-term view for this one. So again, coming to you, Samir, on this one, you already gave a comprehensive overview on the banking space, but what is your view on something like Bank of India as well, if you can elaborate more?
So Bank of India in the PSU space is a decent bank. Valuations are not overly challenging or not overly expensive. But if I were to have a pick in the PSU, Bank of India is not the top pick. Bank of Baroda is my top pick at this point. SBI ideally would be the best bank to be in the PSU space. But given the fact that valuations are much higher compared to some of the other PSUs like Bank of Baroda and PNB, which have, I won't say similar size, but are large sized banks. There is more upside in Bank of Baroda for me, if you ask me. The stock has seen a good correction from 280 levels down all the way to 230. Make that switch if you like. Otherwise, Bank of India also, you can stay invested. I'm sure it will also do well, but it will be moving. I mean, you'll see when you see the rally in the PSUs, I think the larger PSUs like Bank of Baroda and PNB will probably move first, and then Bank of India will follow.
All right. I believe we got the next caller. Ratesh is calling us from Kerala. Ratesh, good morning. And thanks so much for calling us. How can we help you today?
Hello.
Hi, Ratesh. Please go ahead.
Yeah, I have around 40,000 units of Suzlon, which I bought around 13 on average actually.
Okay.
So I've been holding on it for some time. So looking at the current trend, it's going downward. So what is the prediction for Suzlon for next 1 year, looking at the renewables? Whether should I be holding on to it or should I be selling it?
So allow me to take a technical check on Suzlon, Ratesh, because ultimately you've made the right call on the fundamentals and you've bought at a very attractive level. So what you're more concerned about is whether more erosion can take place in the stock price. And considering that you've got 18.5 lakhs as a profit, you want to protect that as far as you possibly can. I've understood your question. Let me go to Vaishali on the charts on this. Vaishali, attractive buy price 13 rupees and significant quantity 40,000 units. What would you do? Would you book partial profits?
Well, actually, I would say it is very tempting to book partial profit, but I think long-term trend is still intact. There's no damage to the trend, but keep a stop loss of 53, because if 53 levels break, then that could call for weakness. So continue holding, because overall, even in a market being so choppy right now, this stock is holding strong. So I would say stop loss should be 53 and continue holding.
Okay, very quick view, Samir. I don't want to spend too much time, but I know that a lot of people will also be interested in Suzlon. I know you've said at 70 plus levels that the valuations were extremely stretched. I believe we spoke it when it was around 80, if I'm not mistaken. Is it more comfortable now, or would you wait for more time to deploy further?
So it's definitely more comfortable, but like you said, I would like to wait a little longer because look, people have factored into that the growth is going to be for the next 3 years, and they started projecting on FY27 and 28. So I think it's the opportunity is very good. I like the space, but for me, 48, 50 levels would be a good buying opportunity. Unfortunately, technically, that becomes a selling point. But as a fundamental investor, anything below 50 would be a great buying opportunity from the next 2 to 3 year perspective.
It's a hold?
I would say hold on,
okay.
Yes.
Okay.
Okay, so a hold is what we are looking for Suzlon in terms of where the fundamental check is. Now the next query is from Santosh from Hyderabad. He's bought 26 shares of TVS Motors, and this is at a price of 2,528. He's just bought it a month back and is and wanted to hold it for 1 year. But considering the stock volatility in this last 1 month, he wants to understand whether he should continue to hold it or whether he should take an exit on this one. Vaishali, coming to you, in the last 1 month period, we've seen about a considerable downtick in this stock price. So what is your view for this one?
I think the damage is pretty much done with. The corrective move has been done with. So now that he's held on for so long, continue holding, because I guess we are coming closer towards the bottoming of the market, selling pressure. So a little bit of erosion can take place, but I think we should hold on for a good bounce from here on.
Hold on for a good bounce is a call on TVS Motor. Chandrasekhar is calling us from Bengaluru. Chandrasekhar, thanks so much for calling us, and how can we help you today?
Sir, I have purchased IRFC, 5,000 quantity at the rate of 160.
Okay.
Already loss of 10%.
Yes.
Is that price will be averaged
Okay.
or no?
And what is the time horizon that you have, Chandrasekhar, when you bought it? Obviously, you bought it because the prospects in the railway space are significant. But did you think that you would hold it for the long term?
4 to 5 months outlook, sir. 6 months.
4 to 5 months outlook. Okay, 6 months outlook. Okay, at the very on the further end of the spectrum. All right. So it's a short-term question. I'll come back to you, Vaishali, on the charts. Then 10% down right now. He's holding. Would you hold? Would you average? Would you buy more this juncture? What are the prospects on the upside?
I think he should average out once the stock comes closer towards 133, 135.
Okay, and what are the targets on the upside?
So I guess once we see a reversal coming in, the first target on the upside would be around 155 levels. Above that, we can see around 166, so on. So 166 should act as a crucial hurdle. If we see the stock moving past that, it would get into a strong, good uptrend.
Okay, so that is the view for IRFC. Now the next query is from Ali from Hyderabad, and he wants to understand the view for Zomato. He's bought it at a price of 276 and wants to understand whether there is growth from these levels going forward. Samir, I'll come to you on Zomato. In this last couple of months, we've seen a little bit of downting as to where the stock price is. Some of the brokerages have also come out wherein they've now started downgrading the stock. What is your view on the fundamentals of Zomato?
So the fundamentals are very good, right? The growth opportunity is very strong. We believe that the quick commerce space will grow. We believe that the food delivery space will grow. But the problem is the competitive intensity that is coming up in the home delivery for the quick service, that is going to increase. And that we've already seen because Swiggy obviously is there. You have Zepto expanding quite quickly. You have Amazon that is going to be making us entry into the home, the quick delivery for homes. You have Flipkart that is talking about it. So with more competitive intensity, I'm not saying the market is not large enough to have all five. I think it is large enough. But if the competitive intensity increases, obviously it makes it a little harder to return to profitability as quickly as probably previously envisaged. So that is one of the reasons that you've seen the stock languishing, I think, over the last 3 months. Plus, you also have to realize that the stock has run up unchecked from all the way from 55 more or less to 300 rupees. So we are seeing the first round of correction that is happening in Zomato. And we've been maintaining for a while that, look, it's going to be difficult to make money on Zomato from the 280 when we spoke last time in the near term, meaning in a 1 or 2 year perspective, because earnings need to catch up in a big way. We need to see Zepto the quick service business of theirs, which is, I forget the brand name, but at the moment, but that needs to start picking up quite quickly. And that is not going to happen according to us. So we felt 200 would be a fair price. If the stock continues to correct, if it comes closer towards 200, we would definitely recommending a buy from a long-term perspective. But at this point of time, we are still midway. So I would stay put.
Yeah, Blinkit is the name that you were trying to recall. Swiggy and Zomato both under pressure today. And of course, the update from Zomato post yesterday's downgrade from Jeffries was that it has restarted its 15-minute food delivery service. I'm curious about what you guys think about that service. Would you be ordering food 15 minutes away? Or would you be willing to wait for the regular, I think, half an hour or so? Half an hour, 45 minutes? Yeah, all right. I think that half an hour is a decent amount of time to wait for food, right? That's how much time I would take to make my own dinner. Let's get Shankar's question in. Shankar is calling us from Chennai. Shankar, thanks so much for calling us. How can we help you today?
Good morning, sir.
Good morning.
Sir, I'm Shankar from Chennai.
Yes. Please go ahead, Shankar.
Sir, I just 2 days back bought Z Entertainment shares, 806 shares at the rate of 124 rupees. I am ready to hold till 2030. Okay. That means 5 years.
Right.
What is the technical outlook and maximum target for that chart?
Okay. So,
I want to know it, sir.
So you're asking for a technical outlook for 5 years, but then there is a lot that can change on the fundamentals till that point. So is that also something that you have looked at, the fundamental aspects of the company, the fact that there's quite a bit of churn on the management side, everything to do with the merger that didn't come through. You've watched all of that, Shankar?
Yes, sir.
Have you checked all of the developments about the company in the recent past?
No, that means past 1 year, share price continuously dropped. And I came to understand one leading newspaper recommends its column by Zee Tele, famous newspaper, business newspaper, for 5 years target of 700 rupees. So I want to confirm it from your side.
Okay, that's an interesting reason to buy. Vaishali, therefore, I'm coming to you. 5-year target. I'm not sure how many times you've been asked this on the technicals. Would you hold? 124 rupees is the buy price, so he's making a bit of a pop. But should he hold for 5 years, and what level would you see?
Well, so I would go step by step because he has always mostly disappointed us. So right now that he has bought at very good support levels. So I would say keep a stop loss of 120 and let it cross 150. If it crosses 150, we are looking at the next target of 190 to 220. So 220 is quite achievable in times to come. But if this stock moves above 220 and if 5 years is the horizon and if the stock goes as per our calculation, this can go towards 400 to start with. So this is how I would look at it for a longer term perspective. But I think he has to follow discipline. Let's see, 120 has to be taken as a strict stop loss. And let's see the levels that I've given you. These are the resistances. Once we see the stock moving past these levels, we can take the further up move.
All right, so that's a view on Zee Entertainment. I've been counting. We've discussed 12 stocks already, and these are stocks that a lot of you are interested in. We've got more that we will do. Hopefully, we'll be doing more on the other side of this break. So do stay with us, Samir and Vaishali, and we'll be back on the other side to take more questions. Viewers, do stay tuned.
On my face.
How do you define a disruptor?
The idea was, why should we charge differently? We should probably charge the same.
Was the idea to change things down?
People would be scared to put 50,000 rupees with us, right? But today, we have customers who put 500 crores with us.
What was your biggest challenge?
Did not have enough money in the bank to even meet the payroll.
What are the lessons that you've learned from the mistakes that you saw being made?
Didn't want to dilute their stake and therefore, ran out of cash.
Think you know what success looks like? Think again. Meet the disruptors, those who dare, dream and defy.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit's research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy
all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target. It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings. Headlines you start your day with.
What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
This is not my face. How do you define a disruptor?
The idea was, why should we charge differently? We should probably charge the same.
Was the idea to change things around?
People would be scared.
Hi, thanks so much for joining in. You're watching Ask Profit, and we've taken quite a few stocks already. We've discussed quite a few of your questions. We will do more of that. And the first question on this side of the break is a short-term query, relatively speaking, on HFCL. And we've got a question coming in from Shrinu, who has bought at an average price of 143 and is incurring a loss, therefore, because the stock is currently trading at 107. Is it a good idea to hold, or should you sell with losses at this juncture, is the question. Vaishali, on the charts, what would you do?
Well, it is in a downward trend, and if 105 levels break, then it can go towards even 195. So that is a call he has to take. Either hold with today's lowest stop loss, 105, or just book the losses.
Okay, so book losses for HFCL. That's the technical view on HFCL. Now the next question is from Sunil Kumar from Cochin. He's bought HDFC, 300 shares of HDFC Bank, and this is at a price of 1,839. Just today we had a Macquarie note reaffirming its outperform rating with a price target of 1,900. Coming to you, Samir, on this one, we've already addressed a lot of banking queries. What is your view on something like HDFC Bank?
So it is one of the top picks in the space. It's gone through a massive consolidation, and rightfully so, because they, after the merger, they had to get their high-cost borrowings down and replace it with your CASA. And CASA has not been easy to come by. So, they've not been able to get the benefits of the spread increase, which everyone was hopeful for. But going forward, as the deposit base continues to increase, and we see that they have the cheapest cost of borrowing, they would probably be one of the biggest benefactors of the banking space. Valuations are very attractive from a long-term perspective compared to historical. So I would recommend to add and average some more and stay invested for the next 2 years. I think you will get 20% CAGR returns for the next 2 years.
In fact, it did hit all-time highs, but it gave up ground since that point. It's down about 8.5% from that point itself, as you were just seeing on the charts. We've got an interesting question coming in from Jayachandra, who's calling us from Hyderabad. Jay, thanks so much for calling us. How can we help you today?
Hello.
Hi.
Hi, myself Jayachandra. I have purchased 6,000 shares of Naval Limited at 521.
Okay.
Shall I hold or buy or sell?
Okay. Can you tell me when you bought this, Jay?
Only 9 months back.
9 months back. 8-9 months back. And did somebody tell you about this stock, or did you read about it?
No, myself I have researched.
You researched. And what about it did you like? When you saw the stock for the first time, did you read something did you see something that you liked? What was it?
I have liked fundamentals.
Okay.
Fundamentals, EPS is good, and all debt-free company, and that's why I have purchased.
Okay. It is, in case you were wondering, and I'm talking to everybody else here, because Jay clearly has done his research on this, Jayachandra. He's bought at a very attractive price, and he's sitting on a very significant profit. It is a ferroalloy manufacturing company. It is also present in the energy, mining, and agri-business, as well as O&M. So it's got quite a few businesses. I'm seeing something about avocados as well. So I'm not sure if, Samir, you've come across this company and whether you've looked at it, 13,000 crore market capitalization. What would you do if you're sitting on substantial amount of profits?
So I know the company, but I haven't studied it in the last maybe 2+ years, so I don't want to comment on it.
Okay. Specific comments are not available on fundamentals, but let me get you a view nonetheless on the technicals. Vaishali, what would you do with this stock?
I would say continue holding because I think the stock has just been consolidating. And once we see a new round of momentum setting in, I think this can go towards 1350 to 1500 levels. So according to me, this should be a hold.
Okay. So a hold is what we are looking in terms of where Nava Limited is substantial gains for the caller that was present over here. But moving on to the next query, it's from Bedri from Chennai. He's holding IDFC First Bank shares and this is at an average price of 65.4. Wants to understand whether she should average it out or continue to hold it for a longer period of time. Coming to you on this one, Vaishali, what is your view on this?
So I would say actually IDFC has been quite a laggard all this while. It gives a bout of momentum and again fizzles out. So I would say at this juncture, rather when market is giving you a chance, we are seeing a little bit of a corrective move. So once you see that, I think better get into ICICI or HDFC Bank.
HDFC Bank, even on the technicals, is a buy. Samir Kulkarni had a question on HDFC Bank and we've addressed that at quite a bit of length. In fact, Samir has also said that it's a buy at this juncture. Dheeraj is calling us from Hyderabad and he's asking about another HDFC group company, which is HDFC Life. Dheeraj, thanks so much for calling us. How can we help you today?
Well, good morning to actually.
Good morning. Good morning.
Actually, bought HDFC Life, 650 of them at 620.
Okay.
Ideally, I'm looking at short term maybe at 650, 660 levels, but the stock has been fluctuating quite a bit.
Okay.
So just wanted to have a short term outlook on the stock.
650, 660. And what is the maximum time frame that you have in mind?
I'm looking at a period of 1 to 2 months.
Okay. All right. So relatively short term time horizon. Vaishali, on the charts, is 650, 660 possible on the upside? And what levels on the downside would you watch out for? What's your stop loss here?
So actually, I do agree with his view because insurance stocks, SBI Life and HDFC Life, these two stocks have really corrected very well as far as technical parameters are concerned. So I would say, and it is consolidating at these levels. So 600 should be maintained as a stop loss. And I think very likely he will meet with his targets in these 2-3 months.
Okay, so that's the view for HDFC Life. Now the next one is from Balaji from Chennai. He's bought shares of GNFC, 100 shares of GNFC at a price of 715. Let's pull up the chart for GNFC. Currently trading at about 525 or so, 552 in fact. So sitting at a loss of 16,000. Wants to understand whether it should average now or book losses for this one. His holding period is for 6 months to 1 year. Vaishali, coming back to you on something like GNFC, what is your view?
No, I would say exact bottom fishing is not possible, but I think the stock has really given a good corrective move and these are the levels. Actually, technically 520 acts as a very good support. So either start accumulating from here on at every dip for a longer term horizon or wait for a dip to come towards 520 and buy.
Okay, Sushil Kansurkar has got the next question and asking about Motherson Sumi. And he's got, I believe, I'm not sure actually, let's pull up Motherson Sumi all right, I'm not sure if this is Motherson Wiring or is this the other company that he's talking about. Why don't we get a fundamental view on both then in this case? Because okay, so I think he's talking about Samvardhana Motherson, which he's bought at a level of 169. So Samir, on the fundamentals, would you hold this? He's incurring a bit of a loss right now.
Yeah, so the fundamentals are very good and the growth opportunities continue to remain very strong. But the problem is he's probably picked it up at a much higher price than what we have comfort with. So if you think about the stock, used to trade around 120, 130 about 6 months to 8 months back, and then it ran up all the way to about 210. At 210, we thought the valuations had reached far higher than the next maybe 3-year earning multiples. So we were not very positive. Now that the fact that it's come down to 152, it's looking a little better. But I'd like to say that, look, if you're a long-term investor, stay put. And if it comes down closer to the 130 levels, you should add on. But at 150, I mean, there's little downside, more upside. So stay invested. But your upside will be a little less from the 160 levels that you have bought at, for the simple reason that you had paid a bit of a premium. So the upside, our target for maybe the next year and a half is closer to about 190 to 200. If you can on corrections, please do average out.
Okay, average out on corrections. That's the view for Swamvardhana. Next, we have a caller joining us. So this is Ravi Chandra from Hyderabad. Hi Ravi. How can we help you on the show today?
Yeah, hi. Good morning, everyone.
Please state your query.
Yeah, actually, I want to buy a fresh shares of ONGC and IOCL. And is it a good time to buy?
Any particular reason that you plan to enter in this segment?
Actually, I mean dividend, because ONGC and IOCL has a better dividend.
Okay. Let me take it across to Samir then. Samir, what is your view on something like ONGC and IOC? Is it the right time to buy?
And okay, let me add to that question, because a lot of people would be interested in buying dividend stocks, right? Particularly those people that look to build this over a period of time. Would these be the best, or would you add to those if you were to build a portfolio of stocks that were to give you good dividend yield over the long term?
So if you want dividend yield, then either you buy in the private sector Vedanta, who's paying dividend left, right, and center because the parent company needs money, or you invest in the government companies like an ONGC, Oil India, IOC, HPCL, BPCL, which are all paying out dividends. There's PFC, REC. I mean, most of these government entities which pay out big dividends are there. But one of the counters that I like, okay, let's first talk about ONGC that we discussed. So we do believe that the prospects for ONGC in the near term are good, given the fact that Donald Trump is talking about making sure that the oil sector gets a boost. Now, the problem is that when he gives an oil sector a boost in the US, it means shale gas getting a benefit. So we need to see how oil prices move. But in effect, what he's trying to say is he wants to encourage and promote more of oil and gas space. And if prices move up because of that, ONGC would stand to benefit. Government has now removed that, scrapped that tax, which was, if prices moved up, government would take some amount of money. That tax is gone. So any price increase would benefit ONGC. Dividend is good. But the one stock I would like to tell you, since you've asked me that as an extended question, there is a company, LIC Housing Finance, which is semi-government, so it's owned by LIC. LIC is owned by the government, so it's through and through. But LIC Housing Finance pays out a very strong dividend. The company is growing at a decent pace, very strong fundamentals. We believe the next few years is going to be good for the company. We have a 1-year target price of about 700 on the stock, so we're talking of 20% upside. Plus, pays a dividend of almost about, if you look at 560 price, it pays a dividend of about 4%. So you're getting 4% plus the 20%. That would be one of the other counters that I look at. And like I said, if you're looking at private space, Vedanta has been paying out as much money as they can for the parent company. So that is one more stock you can make for a dividend purpose.
Wow, that's quite attractive. 4-5% dividend yield is certainly something to look forward to, and hopefully that answers the question that you had specifically on ONGC and IOC as well, and gave you a bonus, of course, if you're looking to build a dividend yield-led portfolio. NBCC is the question we're talking about next, or the stock we're talking about next, and Siddesh has got this question. He's bought at levels of 128, and the stock is currently trading well below that at 89.9, and so I'm guessing that he has missed stop losses that might have been suggested. He's asking whether he can hold. What is the next target that you would give on the stock? And Vaishali, if you can also specify what the stop loss would be from this point on.
I would say actually 85, 86 is a cluster of support levels. So I would say now at this level, no point exiting. Continue holding. If 85, 86 levels break, then it could call for further erosion. But till then, I think it's ready for a takeoff. There's not much of a downside. It's quite oversold. So I think it can give a bounce, and you can look at a near-term target of 95, 96 and thereafter around 105 levels.
All right, so that's a technical view on NBCC. Sanjay Pandya is calling us from Gujarat. Sanjay, thanks so much for calling us, and how can we help you today?
Yeah, good morning.
Good morning, Sanjay. Please go ahead.
Yeah, I have Apex Frozen
Okay.
Foods Limited. My buying price is 257, 1000 quantity.
Right.
How can I do? I have a one year horizon.
Okay. Can you help me, Sanjay, in telling me what was the perspective when you bought it? Did you like the fundamentals of the company, or was it the price movement that attracted you and said that this looks like a bargain, I will buy at this point for a short-term time horizon?
Yeah, that's I to see that the stock is already bought by the near-term good FIIs company like Massachusetts, USA, and then I take the call and I saw the results of the company. But his problem is using the fund is not proper, but otherwise the results are good.
Okay, so you've studied the results as well. You're incurring a little bit of a loss. Let me go across to Samir on the fundamentals. Samir, frozen foods companies, at one point of time, these companies were the flavor of the season, if you can call it that, and they've lost out a little bit since then. Would you buy more at this point? Would you hold for 1 year?
So I mean, it's more shrimp based than frozen foods per se. If you ask me, I don't have active coverage, but I don't want to. So I don't want to get into the details of the company. But yeah, I mean, you can try to take a technical view on that.
Let me do that exactly. Vaishali, what would you say about Apex Frozen at this level? Would you continue to hold if you're seeing a little bit of a downside? I mean, cut in the value that you're holding?
Actually, no. I think the stock is just oscillating. There is no clear trend as such. But I would say 235 should act as a crucial support. If these levels break, then I would say it calls for some weakness. But I think for now, 235 and 280 is the range that we are looking at. Either ways move would give us a clarity in the trend.
Okay, so that's the view for Apex Frozen. Next stock in focus is PN Gadgil. Urvish holds about 300 shares at a price of 739. Wants to understand whether he should continue to hold on to this counter or average it at currently facing a loss of 19,000 on this one. So coming to you, Vaishali, on this one, what is your view for PN Gadgil?
So is it 672? The cost is 672?
The cost is 739.
No, but the current market price. Let's pull up the current market price and see where it's currently trading, please. Let's pull up the chart and see where it's currently trading.
Okay, yeah, it is 670,
Yeah, so it's currently at 672, yeah.
Well, so I would say hold on with 650 as support because it's just range bound. This too doesn't have any clarity. Hold on with 650 as support unless and until the stock moves above 710, 720, there isn't much to say.
Okay, there isn't much to say on PN Gadgil. The stock is down about 2.7% at this juncture. Sanju is calling us from Gujarat. Sanju, thanks so much for calling us. How can we help you?
Yeah, good morning. I'm Sanjay from Surat. Yeah,
good morning. Good morning, Sanju. Please go ahead.
Very good morning. Yeah, I am holding Biocon 900 quantity at the rate of 150.
Okay.
And I have been holding this stock since 2020, I think. Maybe more time, but I am not sure.
Okay.
And I got one share bonus. One by one.
Okay, you got a bonus as well, right.
Yeah. So my question is, should I be continue with this stock or book profit? And if I hold it for more 12 to 15 months, what kind of appreciation should I expect?
Okay. But you bought it based on the fundamentals, right? You bought it for the long term, right, Sanju?
Yeah. As per my knowledge, this company is in the pharma and research. Pharma research, yeah.
Okay. So, Samir, let me go to you since he's been holding since at least 2020 in his opinion, and he's got a very attractive price. Would you continue to hold, and what are the prospects on the fundamentals over the next 12 to 15 months?
So I do believe the fundamentals are quite strong, right? Look at the fact that biosimilar space in the US is expected to grow. They have a few launches in the pipeline where they have the tie-ups in place. So once those launches start taking place in the US, we will see good growth in the top line and profitability. This business has a very strong operating leverage, but it works on both sides, positive and negative. So if something doesn't work out, it works negatively. But we believe that the opportunity for biosimilars is quite large in the US. They are in the right space. the stock has actually been kind of a underperformer if you really look at it over the maybe 1 year or so. Yes, from the longer term perspective, it's done well, but in the last 1 year, it's not been one of the high return generating stocks. But the way I look at it is the next 2 to 3 years will be very positive for the stock. Earnings are expensive. I mean, valuations are expensive, but like I said, earnings are going to catch up. So I would stay invested in the stock.
Okay, stay invested in Biocon. Now, next we have a caller joining us. This is Jay More from Kolkata. Hi Jay, how can we help you on the show today?
Yeah, ma'am, I have a query on the UPL. I am holding it for last 1.5 years. I purchased it at 700 rupees, and since then there was one-time adjustment in the balance sheet, and since then the stock has gone down to somewhere at 450, and now it is trading at 550. So whether we should hold it or sell it for the, I'm having the horizon for the next 1 year.
Okay, you bought this 1.5 years ago. What was, do you plan to add more to this, or you want to understand the future prospects?
No, I don't want to add more to it. Okay. I want to see whether this, how this company is going ahead.
Okay, Samir.
And whether I should hold it or not.
Right, so we'll go across to Samir for your query. Samir, what is your view on something like UPL? He does not want to add more to this position, wants to understand the future prospects of the business and what could he do with this stock now?
So first off, just to answer the second part, he should stay invested in UPL. So UPL has gone through a lot of tough, difficult times recently because of the dumping that happened from the Chinese market in the chemical space, especially the fertilizer, the inventory destocking that happened in the US and in Europe. All of those things have hurt the top line and bottom line for the company. Now, this company had a huge amount of debt on its book when they made an acquisition along with the private equity. So they put in X amount of money and the private equity put in some amount of money. But now, the company had given certain targets of deleveraging, which they are obviously working on. They finished a rights issue. They've raised some other amount of equity. They're selling stake in one of their seed businesses, which is also going to allow them to. So once all of these activities happen and the debt starts coming down, we believe the interest cost will start coming down. So profits from that side will start to see a bit of an uptake. Secondly, we believe the destocking from the international markets is over, and we are closer, I would think, to the end of the dumping that is happening from the Chinese in a lot of the chemical space. So we believe that the profitability and the margins will start to improve for UPL. So stay invested. The stock's valuations, if you look at it on a normalized earnings, are not so expensive. If you look at the last 1 year, they look ridiculously expensive because of what the pain they've gone through. But if you take a slightly longer term, if you look at the last 4 years, 5 years, and if you assume those margins can return, which we believe will happen, then the stock is quite attractively priced, and the stock would probably run up to 800 over the next 2 years.
Okay. All right. So that's the comprehensive view on UPL. It's time to hit the rapid fire round, and this is, or is it? Do we take one more? Okay, it's rapid fire. All right, we've got 2 minutes where we throw as many questions as possible at you, Samir, and you, Vaishali, and hopefully we can take as many as we possibly can. So the first question is from Munir, who's writing in about Kalyan Jewelers, which he's bought at levels of 686. 81 shares, needs a short-term outlook. Would you hold or sell? Vaishali, on the charts?
Sell.
Sell. All right, next one is on Sona BLW. Would you recommend a buy at the current level? The current market price of 574 looks attractive to Harjeet from Mohali. Samir, would you buy?
Yes, buy.
Okay. Birla Soft. Somi wants to know what is the right entry price if you would suggest one. Vaishali, on the charts, is this something that you like?
Currently, yes.
Okay, it's a buy. KC International is the counter that we're talking about. I do not know the name of the. Kanan wants to know actually. Would you buy the stock at this current level? Vaishali?
Wait.
Wait. All right. Hold off. JSW Energy is the name of the counter. Soumya wants to know 654 is the buy price. Would you hold for the short term? Vaishali, on the charts?
Well, I would say yes. Hold.
Hold. Capital Small Finance Bank. Okay, I'm not going to take that one. I'm going to take the next one. Mazgon Dock Shipbuilders. Buy price is 2,390. We got Rajesh from Bengaluru wondering whether to hold or sell. Samir, on the fundamentals?
So on fundamentals, it will be a sell at the moment.
Sell at the moment. Okay. We've got one more. Ratan India Enterprises, average price is 71.8. Niva from Chennai wants to know, would you hold or exit? Vaishali on the technicals?
Oh, Ratan India, I think I'll just have a look 1 minute.
Ratan India, 61.57 is the current price. 71 is the buy price.
Hold.
Hold. Radhakrishnan from Madurai wants to know about Spandana Spurti. Would you buy at the current level and what stop loss would you give? Vaishali on the charts?
Well, so it is make today's low as a stop loss. Well, it's quite a bit because it's already run up 14%.
Yeah.
So if that is what you can do, at least keep a stop loss of 420 and hold for a target, buy for a target of 500.
Got it. I threw quite a few curveballs at you. Thanks so much, Vaishali, for answering all of that. And Samir, as always, thank you so much for taking the time. That brings us to the end of this particular edition of Ask Profit. It's been an absolute pleasure bringing it to you, and we've discussed, I lost count at the end because of the rapid fire, but we discussed more than 30 stocks, and hopefully it's been beneficial. Do stay tuned, lots more coming up over the course of the day from Anushi and myself and the team that put the show together. Thank you so much for watching. Do stay tuned. This is NDTV Profit.
On my face. Chalo, chalo, chalo. How do you define a disruptor?
The idea was, why should we charge differently? We should probably charge the same.
What's the idea to change things around?
People would be scared to put 50,000 rupees with us, right? But we have customers who put 500 crores with us.
What was your biggest challenge?
Did not have enough money in the bank to even meet the payroll.
What are the lessons that you've learned from the mistakes that you saw being made?
Didn't want to dilute their stake and therefore, ran out of cash.
Think you know what success looks like? Think again. Meet the disruptors, those who dare, dream and defy.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy
all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target. It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings. Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
On my face. Chalo, chalo, chalo. How do you define a disruptor?
The idea was, why should we charge differently? We should probably charge the same.
What's the idea to change things around?
People would be scared to put 50,000 rupees with us, right? But we have customers who put 500 crores with us.
What was your biggest challenge?
Did not have enough money in the bank to even meet the payroll.
What are the lessons that you've learned from the mistakes that you saw being made?
Didn't want to dilute their stake and therefore, ran out of cash.
Think you know what success looks like? Think again. Meet the disruptors, those who dare, dream, and defy.
Hello and welcome. You're watching KYC, which is Know Your Company. It's a show where we're going to take you through today. The company is Tega Industries. Interesting one, established in